This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on February 5th, 2016. Our time is 8:35 Mountain. A radio show normally runs on 6:30 CHED in Edmonton, Sunday afternoon at 3. But today, we are on from 10 to 11 a.m., prior to the Oilers-Islanders game at 12:30. Pre-game show coming up at 11. Super Bowl weekend as well. So good luck to our Edmonton Oilers, who have been playing just phenomenal with Connor McDavid back in the lineup. And for those that have not heard our show before, we talk about the world of investing, in particular hard assets. If you have not heard a show or missed a show, go to Harold's websites, HESradio.com and rarecoloreddiamonds.com. We have past shows streaming live there. We also have a podcast. For those that like podcasts, we're podcasting through iTunes. Type in The World Financial Report on Radio. You'll find us right there, and we are portable. We go on any of your portable devices. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. The telephone number 1-800-432-1022. Our featured diamond of the week from rarecoloreddiamonds.com is a .33 carat radiant cut fancy green. This is exquisite. You can see it at rarecoloreddiamonds.com. Featured diamond of the week. We'll talk more about diamonds in the second half of the show. Coming out this morning, Canadian job numbers. We lost 5,700 jobs in Canada. The employment rate, 7.2%. That's how many people are unemployed. In the United States, they gained 151,000. They were expecting around 190 to 200. Their unemployment rate fell 4.9%. And you can see that there is a lot of concern around the world, even in the United States, that we may be facing recessionary winds coming our way. Canadian dollar this morning is at 72.34. U.S. dollar at one point during the week had a big pullback. It is stronger today. One of the reasons it pulled back is because it seems that the market feels the Fed in the United States will not raise interest rates. They did prior to the end of 2015. The promise was 4 interest rate rises in 2016, and now because of the economic situation in the world, the belief is no rise in interest rates in the United States, although with this job report, who knows what the Fed will do. And Harold, obviously, as you've said for quite some time, the U.S. dollar is in a bull market. In any bull market, you will have pullbacks, and it's not a surprise to see a little bit of a pullback, but it is very strong today, the U.S. dollar.
You bet it is, and it will continue to be, because no matter what's happening around the world, and there's a lot of problems everywhere, in Europe, in Asia, obviously China's got serious problems, Canada, with the low price of oil, has dropped the Canadian dollar tremendously, and it's not that things are great in the United States, they're just better in the U.S. than they are everywhere else. So we've seen a huge rally in the U.S. dollar, and as goes the U.S. dollar, as goes gold. So the fact is, when the U.S. dollar pulled back this week, and it pulled back from 99.30 all the way to 96 and change, is why we saw such a strong rally in gold. But in all honesty, nothing is changing in the markets at this particular point. So the fact is that I still see the same market condition. I see gold falling as the U.S. dollar gets stronger. There's a direct correlation between gold and the U.S. dollar. The stronger the U.S. dollar, the weaker gold. Back in the 90s, when the U.S. dollar was the strongest currency, trading at around 108 to 110, gold was down at $250. In 2011, when the U.S. dollar plummeted to 72.5 cents, gold hit a lifetime high of $1,900. So there's a direct correlation between gold and the U.S. dollar, just like there's a correlation between the Canadian dollar and oil. The unfortunate thing is that the Canadian dollar drops as the oil market falls further. And with a huge glut of oil on the market, we're anticipating that the price of oil, and I don't want to scare anybody, but it could definitely go down to the $20 level. And that's exactly where we do believe the oil market is going to, because there's a huge glut of oil. So in all honesty, if we do get the Canadian dollar, or oil actually, down to $20, that would bring the Canadian dollar down to around 60 cents. And that's where we see the market going to. So the fact is that we have some clients that are very aggressive traders, take this information and have shorted the gold and shorted the Canadian dollar and shorted the oil market over the last year and made a tremendous amount of money. The other thing is that the U.S. dollar should rally very, very strong. Now, just because they didn't raise interest rates yet doesn't mean that they're not going to do it. And the fact is that the market today is showing that they probably will do it within the foreseeable near future, because right now the U.S. dollar is trading up 58 points and is trading at 97.17. What we see happening in the U.S. dollar is a strong rally that will not only break above par, and we've seen two closes above par already, so we do believe that the next major move for the U.S. dollar is 101.5. But we do anticipate that the price of the U.S. dollar will go actually as high as 108 to 110. Now, we do not believe that gold is going to drop like it did back in the 80s. We do not believe that gold is going to drop all the way down to $250 like it was when we first started the show back in 2000. We think there's still very strong potential for gold. We're only saying over the short term that gold is going to fall further because the U.S. dollar is going to rally strong and probably go to 108 to 110, which would push the gold market to under $1,000, possibly as low as $850, which is the heaviest support level for gold. So all in all, this week was a crazy week. You saw a lot of volatility in the market. A lot of people called and asked if we've seen the bottom of gold. They wanted to start to buy it. I just don't believe that we have at this point. Unless the U.S. dollar is going to really drop, which I just don't see, I see the gold market going lower again to 1,000 and then possibly as low as 850, depending on how severe the move of the U.S. dollar is on the upside. Again, unfortunately, we see the price of crude oil going substantially lower. It's down 18 cents today at 31.54. But if it did go to the $20 level, that would wreak havoc on the world financial markets. Obviously, it would be terrible for Canada. I'm Canadian myself. Randy's Canadian. Most of the listeners to our show are Canadian. So, again, we feel for what's happening in Canada at this point, but the bottom line is that there's a huge glut of oil on the market. And it's getting even worse with the fact that Iran, who has had major sanctions against them for the last several years, the U.S. has now waived those sanctions and is now allowing Iran to start shipping oil. Now, at $30 or $28 that it hit last week, nobody's making money in oil. The production cost for oil in the United States is over $80 a barrel, so they're not producing at this point, nor is most other OPEC members, because they're losing money on every barrel of oil that they produce. However, Iran doesn't care at this point, either does Russia, and both are producing massive amounts of oil, and that's why I'm saying that some oil is trading for as low as $20 in Saudi Arabia and in the Middle East at this particular point. So we're sticking with our guns at this particular time. We're going to say that nothing has really changed in the market, at least not enough to change our thinking over the short term on this market. We anticipate that the U.S. dollar will go higher, the Canadian dollar and crude oil will go lower, and gold will go lower, and those are our trades at this particular point. You know, the fact is that it's very, very difficult to make money in today's marketplace. Most people are suffering, they're confused, they don't want to trade in the volatile markets. You know, on one hand, you put your money in the bank, you're barely getting 1%, and the banks aren't safe. And then, on the other hand, it almost forces you back into the stock market, which is one of the riskiest areas that you could put your money in today. So what does an investor do? For our Canadian clients, and just so you know, and as Randy mentioned at the beginning of the show, you know, we've been doing this show now for going on 16 years. The fact is that it's a very popular show. We've called some tremendous markets over the years, and we want our Canadian clients to do well. We have some private investments that pertain to the diamond business, the rough diamond business that is doing tremendously well and pays our Canadian clients 25% or more a year. So if you're not in that situation, if you're not making the type of money that my clients are making at this point, you may want to inquire into it. The fact is just give the office a call. I'll sit down and talk to each and every one that wants to call and get an idea as to what they can do with their money. Now, all of us invest differently. Myself, personally, I don't invest in paper assets, not at this particular point. The stock market is a gambling casino. There's no sense in putting your money in the bank, but there are certain investments out there. Again, these are private investments with my own company that my clients are doing tremendously well. So if you want to hear more about that, please give me a call, and I'll spend as much time with you as you possibly need, just to let you know what's happening with your own portfolio, how bullish we are and how you're investing your money at this point, and how you may do better, possibly going into one of our private investments. So, Randy, that's the way I see things at this point. Even though the markets, certain markets rallied strong this week, I really don't see any major changes from the recommendations that we've been making for the last year.
And to verify one of the things that you talked about, countries are not stopping pumping oil. According to new analysis by Wood Mackenzie, not even 0.1% of global production has been taken offline amid the crash in crude prices. Wood Mackenzie reckons just 3.4 million barrels per day of production is cash negative, with Brent around $35 a barrel, leaving many producers prepared to ride out the storm amid hope of an eventual rebound. So yes, there are a lot of countries that continue to pump oil because they need the cash flow, and they're doing it at a loss. Coming out this morning, I was noticing that T. Boone Pickens, who is world-renowned as an oil investor, is completely out of the oil market right now, waiting for an opportunity to get back in. Connect with Harold. Speak with him personally, privately. The call is free. And obviously, when you speak to him, it's confidential. What's said between the two of you, 100% confidential. 1-800-432-1022. Learn about investing in the times that we live in. Economically and geopolitically very unstable. RareColoredDiamonds.com. RareColoredDiamonds.com. 1-800-432-1022. We are on just prior to the Oilers pregame show. Oilers and New York Islanders, 12:30. Pregame show, 11 a.m. And it's Super Bowl Sunday as well. One of the things that we've been following on our show for quite some time is negative interest rates, cashless society. Rick Rule came out this week, and on the last show, last week, the Japanese went to negative interest rates. Rick Rule said, it's a new chapter in government's war against their own people, in particular, savers. Negative interest rates are probably the dumbest idea since central banking. The idea that someone would work hard all of their life, and then you would steal the proceeds from their hard work with negative interest rates is the most insane disincentive to work hard, and the savings of the Japanese people who have turned around the Japanese economy since World War II are feeling the pain. And it's the latest and most creative chapter in the ongoing currency wars, the ongoing race to the bottom among the world's major currencies. I guess the Japanese will succeed in decimating the yen, and I guess they will succeed in decimating the savings of their citizens. To give you an idea, and this is a quote from Egon von Greyer's, 25% of government bonds are now negative around the world. On Friday morning, Bank of Japan, as we mentioned, was the latest country to introduce negative interest rates. There are now 13 countries with yields up to 2 years being negative, and 10 countries with negative yields up to 10 years. I've been saying for a long time that Japan is bankrupt, and negative interest rates will, of course, not save their economy. And it was interesting to note that coming out this week, Kuroda, the head banker in Japan, said there's no limit to monetary easing as he vowed to slash Japanese interest rates deeper into negative territory if necessary. In his first speech since last week's surprise cut in interest rates to minus 0.1%, the Bank of Japan governor said there's more room to ease, and he would even invent new tools rather than give up on the goal of 2% inflation. Going forward, if judged necessary, it is possible to cut the interest rate further from the current minus 0.1%, according to Mr. Kuroda, pointing to the Swiss National Bank at minus 0.75%, and in Finland, minus 1.1%. So you are really into uncharted territory at this time. In fact, Deutsche Bank's Jim Reed came out this week and said, just wait until corporate bonds start to go negative. We're seeing that government bonds are going negative. Just wait until corporate bonds go negative. And the Fed, it's interesting to note, Peter Schiff is not big on the Federal Reserve in the United States. He said this week, we're going to have a serious recession and negative interest rates before the election. The CEO and chief global strategist for Euro-Pacific Capital, and noted obviously bear on the stock market and bull on hard assets, said that serious economic destruction is just a few months away. I think the Fed is going to have negative interest rates before the election because we're going to have a serious recession. That's what he said to Business Insider. In fact, Schiff said they may already be in recession, and this one is going to be a doozy. We're in worse shape than we were now back in 2007. Chief among his concerns is a growing bubble of debt that has accumulated in the United States, which he said is even bigger than the real estate bubble that burst in 2008. He said there isn't much debt in the real estate sector, but the sum total of debt from student loans, auto loans, government debt, and the Fed's balance sheet is massive, according to Schiff. This total is far bigger than what we saw before either the housing or tech bubbles. Once this bubble pops, Schiff fears that it may already have. The following recession will force the Fed's hand. That will make them pull interest rates into negative territory. Harold, we have followed this story for quite some time, negative interest rates. We know that it's a very serious situation, Japan going to it, saying that they could even go into further negative territory similar to Finland and Switzerland. It's really unprecedented times, and that's why we say to people, give you a call at rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022, rarecoloreddiamonds.com, because it is so important. People work so hard for the money that they have, and now is the time to profit and yet protect the money. As we've said on past shows, when it comes to investing, there are two rules. Rule 1, don't lose any money. Rule 2, remember Rule 1. And Harold, it's so important now more than ever to speak with you because of what's happening in the financial markets and even geopolitical concerns as well. And this Zika virus is something to be concerned of.
You better believe it. There's a lot of things going on at this particular point, but the fact is at this point is that when you're looking at negative interest rates, who's going to keep their money in the bank? Because the relationship we always had with our banks was you put money into a savings account. I mean, there was times that interest rates were at 10, 15, 20%, and people were living off of that and buying CDs and that type of thing. Now, with negative interest rates, you have to pay the bank to keep your money there. And the banks are not trustworthy, and the banks are not safe, and the banks are not solid. So why in the world would we want to do that? What they're trying to do, actually, by negative interest rates is force people to spend money. And by spending money, it's going to help the economy, and that's the idea behind this. But all in all, I just don't see it happening. I see people really freaking out about the negative interest rates and will not keep much money in the bank, only enough to pay their bills type of thing. So I think it's actually going to work against them as opposed to work for them. But, you've got the negative interest rate situation then. We'll be doing a seminar in the near future on the cashless society that's coming. That's another situation that most people don't know anything about at this point, but there's a couple countries right now, Finland, Sweden, Cork, Ireland, some other places around the world that are playing with no cash whatsoever. We're going to a cashless society, meaning that cash will be outlawed. You'll have a certain period of time in which you convert your cash and put it into the bank or put it back into the system, but the fact is they're going to be looking for that. So you'll need to attend our seminar. It's going to be virtual. You'll be able to attend the seminar over your iPhone, iPad, or personal computer, but believe me, there's so many things happening in the world today that are so confusing and so dangerous that if you don't know what you're doing, you could really hurt your financial situation substantially if you make a move that is not conducive to what the marketplace is recommending at this time. So please stay in touch with us because, again, if you're confused as to where you're investing your money and what you need to do, give me a call. I'll sit down with you over the phone, and I'll listen to what your situations are and where your money is invested and try to help you. I'm a very conservative person. However, we do have some private investments with our firm that are doing tremendously well, and if you want to hear about those, it'd be our pleasure to help you. Some of our clients are making it 25% or more with our private investments at this time.
Speak with Harold, 1-800-432-1022. 1-800-432-1022, rarecoloreddiamonds.com. Our featured diamond of the week is a .33 carat radiant cut fancy green. See this diamond at rarecoloreddiamonds.com, featured diamond of the week. And Harold spoke about cashless society this week. Germany unveiled cash controls. There's a push. What they want to do is ban transactions over 5,000 euros and get rid of the $500 euro note. The Social Democrats, the junior partner in Angela Merkel's coalition government, has proposed a $5,000 limit on cash transactions and the elimination of the $500 note. As we talked on the last show, it is absolutely stunning that if you buy something for a large amount of money and you pay cash, that you're considered a criminal. It's just not right. As well, Bloomberg came out with an opinion this week and said, bring on the cashless future. You can read that in our free weekly newsletter. Get our free weekly newsletter from Harold. Connect with him. 1-800-432-1022, rarecoloreddiamonds.com. We'll be happy to send it out to you via email free of charge every week. And there was something else that was very interesting. We were talking about cashless society and negative interest rates. The Fed came out this week and wants to test how banks would handle negative interest rates. Isn't that interesting? Here's the Fed coming out and saying that we would like to do a test and see that if banks had to go to negative interest rates, exactly what would it do to them? Now, is this a precursor to what Peter Schiff is talking about, that if they get into a bad situation in the United States with a serious recession, here they are almost at zero interest rates now, would they go to negative interest rates similar to other countries around the world? It makes you wonder if the Fed is asking banks to test and see what negative interest rates would do to their book of business. Connect with Harold, rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. It's a confusing time financially and geopolitically, and Harold is there to help you. We are on prior to the Oilers pregame show at 11 today. Oilers and New York Islanders coming up at 12:30, pregame show at 11. If you'd like to speak personally and privately with Harold, 1-800-432-1022, rarecoloreddiamonds.com. We're going to come back after the break and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on February 5th, 2016. It's Super Bowl Sunday. Our time is 9:01. But more important for Oiler fans, we were on prior to the Oilers pregame show at 11 o'clock in the morning. Oilers and Islanders at 12:30. Sit back, watch the Oilers game, and then get ready for the Super Bowl with Carolina and the Denver Broncos. And hasn't it been exciting to have Connor McDavid back in the lineup? He is just so amazing. After being away 37 games and to come back and play so well, it has been very, very exciting. Anyway, the Oilers pregame show coming up at 11 o'clock, and then the game at 12:30. Connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com. 1-800-432-1022. We live in very tumultuous times when it comes to the world's finances and geopolitically as well. We have our radio show that runs on CHED normally Sunday afternoon at 3. If you ever miss a show, we are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on radio. You will find us there. And obviously every Sunday afternoon at 3 on 630 CHED. If you ever miss a show, you can catch it online or obviously via podcast. Our featured diamond of the week is a 0.33 carat radiant cut fancy green diamond. It is exquisite. Greens are the rarest of the rare. You can see it at rarecoloreddiamonds.com, featured diamond of the week. And one of the things that I did, before we get to Harold's commentary, one of the things I did is I went back, for those that might have missed it, because I know we have some new people listening this week. There was an auction at the beginning of November of 2015. Last week we reviewed an auction at the beginning of December. Now, Christie's Magnificent Jewel Sale, November 10, 2015, gave us lot 409. The largest cushion-shaped fancy vivid pink at auction. And the estimate on it was $23 million to $28. It went for $28.5 million, and it went to a billionaire who picked it up for his daughter, Josephine. Now, as well, there was another auction the next day, and there was a blue diamond sold, Sotheby's Magnificent Jewels and Noble Sale, November 11, 2015, Geneva, Switzerland. It was a fancy, vivid blue diamond ring. The estimate on it, $34 million to $53. It went for $48.5 million in total. This Chinese billionaire spent $77 million on blue diamonds as an investment, or together, actually, the blue diamond and the pink diamond, together as an investment for his daughter, Josephine, and the diamonds were renamed in honor of her. We have other auction results from that auction. We can send them out to you. We will run through a few of them, but first, we'll let Harold give his commentary. But Harold, at the end of 2015, it was very exciting for colored diamonds.
You bet it is, and the worse the world economy gets, the better the rare colored diamond market gets. You know, a lot of people don't know that diamonds come in colors. They may have seen yellows before, but most people don't know that the rarest of all diamonds are red diamonds. Very seldom does a red diamond ever come out of the mine. When they do, they come from either Australia or South Africa, and a little diamond the size of your baby fingernail could be over $2 to $3 million. Then you've got the blue diamonds. In the last 10 years, vivid blue diamonds have gone up 1,000% because they're so rare. You need boron in the ground for a diamond to turn blue. So two identical diamonds can come out of a mine. One will be white, but one turned blue because there was boron in the ground, and the difference can be $20,000 for the white diamond and $2 million for the blue. That's how rare colored diamonds are. The other diamonds that we need to look at this point, probably the best investments of all at this time, are pink diamonds. The reason I say that is that pink diamonds, 95% of them, come from one mine. It's the Argyle mine in Western Australia. It's a phenomenal mine that's been in operation since 1986, produced over 30 million carats of diamonds a year. But those are low-grade industrial white diamonds that are used to cut other diamonds and do oil drilling and things like that. But what made this mine famous, the Argyle mine, is that they produce 95% of the pink diamonds in the world. Now, you're not talking about a lot of diamonds. You're talking about enough diamonds to fill up a champagne flute. That's how small the pink diamond market is. Pink diamonds are known as the most concentrated form of wealth on Earth. They sell for more than any other product could sell for, and 95% of these diamonds are under a quarter carat. That's why they're called the most concentrated form of wealth on Earth. Now, why is this diamond such an amazing investment? Because the Argyle mine is getting ready to close down, and there's no other mines in existence that produce any quantity whatsoever of pink diamonds. So before 2020, Rio Tinto, who owns Argyle, is closing down that mine. and the price of pink diamonds could explode, anywhere from 3, 5, 1,000% return, depending on how heavily saturated that pink diamond is. We invested very, very heavily in pink Argyle diamonds. So have our Canadian clients. In actual fact, it's one of the best investments you can make. At the beginning of the show, Randy talked about two things when it comes to investing: preserving your capital and making money. The thing is that in these particular times where things are so difficult and so risky and so volatile in the markets, the first and foremost, most important thing is to protect your equity, your capital, not lose it, because it's very difficult to make back. Secondly is making money, capital appreciation. You get those both in diamonds, because rare colored diamonds, investment quality ones, never decline in value because there's so few of them. Again, back in 2003, you could have bought a 1-carat vivid blue diamond for about $400,000. Blue diamonds in 2014 and 2015 sold for over $2 million a carat. Then Randy just brought you up to date on the blue diamond, the Blue Moon, I believe it was called, that the Chinese billionaire bought for his daughter, and that diamond sold for $48 million, but it's only 12 carats. That means that blue diamonds, vivid blues, have now jumped again up to over $4 million a carat. Now, I don't want to confuse anybody here, because, again, most people can't afford to spend $4 million on a diamond or $4 million a carat for a diamond. But if you look at the auction results, and we own our own auction business also, but if you look at the auction results, it's the mid-price diamonds, the $100,000 diamonds, the $200,000 diamonds that have been going up the most percentage-wise. And those are the type of diamonds that we recommend to our clients. To buy a half a carat pink Argyle diamond, it could cost you anywhere from $250,000 to $1 million, depending on how saturated that diamond is. But the fact is that diamond, in less than 5, 6, 7 years from now, when all the diamonds are gone, could be 10 times the value that you paid for it. So it's one of the best investments you can make. The featured diamond this week is one of the rarest diamonds you're ever going to see, because it's green in color. What turns a diamond green is uranium. And the fact is that very, very few green diamonds ever make it to the marketplace. We believe that greens are the next blues and pinks. They're still priced reasonably enough that they're affordable. But as time goes on and the world economies get worse and worse, these diamonds can take on a life of their own, and they can absolutely skyrocket in price. The other thing about rare color diamonds is they're portable private wealth. You can go anywhere with them. They can fit in your pocket of your jeans, and nobody would know that you're carrying a $2, $3, $5, $10 million diamond on you. As long as you have the papers with you, if you're crossing into another country, and you own that diamond, you've got no problems. But you cannot take cash more than $5,000 or stocks or anything like that across the border. Diamonds are that type of asset, portable private wealth that never declines in value, and faced with what we're facing now in the marketplace, is one of the best investments you'll ever make. So, again, Randy, greens are the next blues and pinks. They're going to take off and run in price. Now's an excellent time to invest in green diamonds.
Greens have always been my favorite, and there are different colors of greens, but this is, in particular, a very beautiful shade of green. Featured Diamond of the Week from rarecoloreddiamonds.com, a .33 carat radiant cut fancy green. rarecoloreddiamonds.com. See it at the Featured Diamond of the Week. Click that link. Speak personally and privately with Harold about investing in hard assets, diamonds, gold, silver. rarecoloreddiamonds.com, 1-800-432-1022. Now, let's go back to some of the auction results that Christie's had on November the 10th in Geneva. We talked about the pink diamond that went for $28.5 million. It was $28,687,000. Lot 391, a rare colored diamond ring, set with a fancy dark bluish-gray cushion-shaped diamond. It weighed approximately 25 carats. The estimate on it was $1.2 million. It went for $1.9 million, $1,982,000. Lot 267, a colored diamond and treated colored diamond ring, set with a fancy pink round brilliant cut diamond weighing approximately 3.53 carats, and it also had a fancy intense green round brilliant cut diamond. It weighed approximately 3.78 carats. Now, the estimate on it, $250,000 to $340,000. Yeah, that's right. $250,000 to $340,000 went for $1.2 million. $1,263,000. Lot 341, a colored diamond and diamond ring, set with a fancy vivid yellow, oval, brilliant cut diamond weighing approximately 9.28 carats, and the estimate on it, $590,000. It went for $987,000. Sotheby's magnificent jewel sale, November 11, the next day. And this is the day that the Chinese billionaire picked up the blue diamond for $48,468,000. Now, lot 495, a fancy vivid yellow diamond, set with a step-cut fancy vivid yellow diamond weighing 22.43 carats, between two similarly cut diamonds weighing 4 carats and roughly 4.09 and 4.13 carats. The estimate on it, $1.2 million. It went for $2.5 million, $2,581,000. Lot 507, an attractive, fancy, intense blue diamond ring, set with a pear-shaped, fancy, intense blue diamond weighing 3.17. And this was a beauty. The estimate on it, $1.1 million. It sold for $2.5 million, $2,521,000. Lot 484, an attractive fancy brown orange pink diamond ring, set with a pear-shaped fancy brown orange pink diamond weighing 10.58 carats. The estimate on it, $971,000. It sold for $2.1 million, $2,162,000. Lot 485, a fancy intense yellow brooch. And this was a beauty. It actually was weighing approximately 35.57 carats. The estimate on it was $971,000. It sold for $1.9 million, $1,923,000. And we just have a few more here. And these really show that some of the lower-priced diamonds had massive, massive increases. We'll have one final larger diamond, lot 471, a faint pink diamond. The estimate on it was $388,000. It sold for $1.3 million, $1,325,000. Lot 247, a fancy light diamond yellow ring, and it weighed 11.83 carats. The estimate on it, close to $59,000. It sold for $150,000. Lot 49, a diamond ring, fancy intense yellow diamond weighing 3.18 carats. The estimate on it was $18,000, close to $19,000, sold for $118,000. Harold, we have said for quite some time, we see big auction results over in Asia. We're starting to see them in Europe and in the United States as well, as we talked about on the last show. But some of those lower priced diamonds, here you have a diamond for $58,000, almost $59,000. And these people know what they do, what they're doing when they grade these diamonds. It sold for close to $150,000. The same with this other diamond at $19,000, selling for close to $119,000. You can see that the lower priced diamonds can give you some very major gains.
You better believe it, and it's great to see, because my clients are not the Warren Buffetts of the world. My clients are everyday, hardworking families that just want to do better than putting your money in the bank at 1% and don't want to go into the stock market and lose all their money. Fact is that you'll do better in a rare colored diamond than you will by putting your money in a retirement savings plan. In fact, most of my clients all agree that retirement savings plans in Canada have not made money for over a decade now. So the fact is that we work so hard. You know, we do everything that we can do. We're frugal. We put our money away for our future. We invest in retirement savings plans, and it falls flat on its face, because the fact is that the only benefit of a retirement savings plan is you get to defer your taxes. But you're supposed to be able to put it into a safe investment that also will make you money over time. What's going to happen is is that they're not going to make any money. If you're sitting in mutual funds or stocks, chances are you're going to lose all of your money or a major part of it. Stocks can definitely go to zero. So that's one of the major reasons we advocate investing in rare colored diamonds. They're portable private wealth. They've never declined in value. They can skyrocket in price. And we are the only company that owns a virtual live auction business that will resell your diamonds down the road. Now, obviously, with the Argyle mine closing in 4 to 5 years, everybody who owns Argyle Pinks are just holding on to them. They're hoarding them because it could turn out to be one of the biggest payoffs we've ever seen. And you can still buy Argyle Pink diamonds at very good prices. So we're very highly recommending over any other assets like stocks or bonds or anything paper. You need to get something into the rare colored diamond market. Pink diamonds, they're going to explode again over the next 4 to 5 years because there won't be any more of them. And then you've got these magnificent green diamonds that we've been investing in extremely heavily, and I believe those are going to make a fortune also.
You're listening to the World Financial Report on radio with Harold Siegel and me, Randy Marshall. Our show normally runs Sunday afternoon at 3. Today we are on from 10 to 11, and we are minutes, in fact, about 6-7 minutes away from the news coming up at the top of the hour, and then the Oilers pregame show. At 11 o'clock, the Oilers pregame show, Oilers and Islanders at 12:30. If you'd like to connect with Harold, speak with him personally and privately about the investment environment that we are in today, why we advocate having an insurance policy in your portfolio of hard assets. One of those assets, beyond gold and silver, diamonds. Our featured diamond of the week is a .33 carat radiant cut fancy green diamond. See this diamond at rarecoloreddiamonds.com, featured diamond of the week. rarecoloreddiamonds.com, featured diamond of the week. And if you would like to speak with Harold, he'll be happy to talk to you anytime. The call is free. The conversation is confidential. rarecoloreddiamonds.com, 1-800-432-1022. Now, for those that may be listening to our show for the very first time, when it comes to pink diamonds, they are so rare. In fact, firstly, there are diamond mines on every continent that produce white or colorless diamonds. However, the Argyle mine in Western Australia is really the only reliable source of pink diamonds on the planet, being responsible for a staggering 90 to 95% or more of global supply. And we know that that's going away in 2020. And more than likely, they may have a year or so of diamonds that they've banked in their vaults. But after that, what's out in the marketplace is going to be what's there. And as Harold was saying, we've heard that people are hoarding these diamonds. The prices will be staggering in the future. Secondly, 75% of polished pink diamond production of the Argyle mine weigh less than 1/10, 0.10 of a carat. This means that pink diamonds of significant size are rare as the proverbial hen's teeth. For the 30 years or so that the Argyle mine, which is located in Western Australia, has been selling pink diamonds to the world, the price has never gone down despite local or global economic crises, and therefore, obviously, is a great potential investment or hedge. And Harold, that's what we're seeing at auctions around the world, pink diamonds selling for incredible prices.
You bet. And it's only going to get stronger and stronger. You know, Economics 101 says when the demand for a commodity is high and the supplies are low, the prices always go higher. And that's a perfect example of what's happening with the pink diamond market. So again, we anticipate that diamond market will still get very strong. It's a small market. We bought heavily into it. Very, very excited that we did. They're amongst the most beautiful diamonds you'll ever see in your lifetime. And if you want to get in on the ground floor, start to look at some of our green diamonds, they're going to increase in value very, very quickly. And again, they're just absolutely sensational. You need uranium in the ground in order for a diamond to turn green. These are some of the rarest diamonds you'll ever see. And again, where we do have diamonds starting at 20,000 and going all the way up to 40 to 50 million, the majority of our clients spend under $250,000, in a lot of cases under 100,000 to buy a diamond. But it's one of the best investments you could make. You're not going to lose your money on it because they never decline in value, and they have the potential of making you a lot of money. So we're very excited about what's happening in the diamond market at this point.
RareColoredDiamonds.com. RareColoredDiamonds.com. Featured diamond of the week is a .33 carat radiant cut fancy green. See it at RareColoredDiamonds.com. Speak personally and privately with Harold about investing in hard assets. Have that insurance policy in your portfolio. 1-800-432-1022. 1-800-432-1022. And we do know that pink diamonds are going to be going away here by 2020. And it's one of those things that you do not want to delay on. If you've been waiting to make an investment, now is the time. Because, Harold, there is going to be a window of opportunity to get into these diamonds before they really increase in price. And now people should be taking a hard look at them because we only have a very short period of time, approximately 4 or 5 years, and then we could see some major increases in the price of Argyle pinks.
You bet, Randy. We're very, very excited about that. Very excited. A lot of our clients own them. Many have put them into beautiful pieces of jewelry and enjoy them. And then when they go to auction, these diamonds take on a life of their own. So it's a great time to be in a market like that. You know, these stock markets are very volatile, very risky, not what they used to be. Same with the commodity markets. The currency markets are crazy. They're up one day, down the next type of thing. But one thing that is consistent is the rare colored diamond market because, again, you're talking about such a tiny little market and such an important market, too. So, again, we very heavily recommend that you look at rare colored diamonds as an investment. And just for all of us grandfathers and grandmothers out there, I've got 4 grandkids myself, all of them have diamonds put away for the future. No stocks, no bonds, nothing paper, only diamonds. I think that, you know, my grandkids that are all below 12 at this point, you know, the 1.5 and the 3-year-old, they're going to, one day when they're 28 years old and we're ready to cash these in for them, they will be shocked as to what they're going to be able to start off in this world with, and that's why we go the route that we did. Diamonds are safe, they never decline in value, but they've got tremendous, tremendous opportunity to go substantially higher.
One of our top stories from last week was Norway's 2 biggest banks have stopped handling cash. And we had that story in our free weekly newsletter this week, that in Germany, one of their political parties is saying that they want to abolish cash purchases above $5,000 and get rid of the $500 euro note. Now, the banks, the 2 banks in Norway, have basically said one of the reasons is that they think if somebody wants to make a purchase in cash, that you're a criminal. In fact, in 2013, a Norwegian man had his home ransacked by police after he purchased a PC, TVs, and a washing machine for 80,000 kroner in cash from an inheritance he had received. So you can see that it's a time where things are very, very different. As we touched on over at the very beginning of the show and over the past several weeks, negative interest rates all around the world. You have a push towards a cashless society. In fact, Bloomberg coming out with a commentary this week saying as much. You can read that in our free weekly newsletter. Cashless society, negative interest rates. Where is this all heading? We believe that you need to have an allocation of hard assets in your portfolio to protect yourself in the economic and geopolitical times that we're in. And Harold, you have about 30 seconds to give us a wrap-up.
Well, again, now is not the time to speculate. Now is not the time to leverage positions or go into these volatile markets. Now is the time to sit back and think about how you're going to invest your money, because the times are totally different today than they were even 10 years ago. So the fact is that our offer is open to any of our Canadian clients. If you're confused as to what to do with your money and what your investments are going to do, pick up the phone and give me a call, and it doesn't matter how much money you have. It's important that you understand what your options are and what you can do to still stay in the game, and I'm here to help you out. So give me a call, and I'll spend as much time with you as you need to try to figure out what is the best way for you to do well in these extremely volatile and risky markets.
Thank you very much, Harold Siegel, for your knowledge and another great show.
Well, it's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day, and go Oilers.
RareColoredDiamonds.com, 1-800-432-1022. Yes, go Oilers, go. That's it, another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.